Good morning and welcome to Charting the Markets on Wednesday, the 12th of July 2023. Overnight, the Reserve Bank of New Zealand kept its interest rates at 5.5%, and that was widely expected by the financial markets, so nothing much happened there. But interestingly enough, its neighbour, the Reserve Bank of Australia, announced that it will slash the number of times it meets in a year to set interest rates while making the meetings longer as part of a general overhaul into how the central bank decides the country's monetary policy. And this was announced at a speech by the Governor Philip Lowe earlier today. Now, talking of interest rates, the Fed will be closely following today's US inflation data, that is to say the CPI, the consumer price inflation data out for the month of June at 1:30 p.m. UK time. And we expect inflation on a year-on-year basis to come in at 3.1% following May's 4% increase. And the core inflation number, that is to say excluding volatile items such as food and energy costs, is also going to be looked at with a lot of interest by market participants. And this we expect to rise to 5% on a year-on-year basis. That would be the lowest reading since November of 2021. And that compares to a reading in May of 5.3%. And on a month-on-month basis, we're expecting to see a rise of 0.3% in June compared to 0.4% in July. And these readings of the inflation data in the US will probably have a lot of impact on the financial markets, on the US dollar, of course, but also on stock indices and markets such as gold. So we'll cover all of these later on. But let's just continue with the economic calendar. And I'd just like to mention also that at 3 p.m. we've got the Bank of Canada, which is expected to raise its rates by 25 basis points for a second consecutive time to now 5%. So this is widely anticipated to happen at 3 p.m. today. And we'll have a look at dollar Canada in a minute. And then at 3:30 p.m. we've got the US EIA crude oil inventories out for the week ending the 7th of July. And we expect that stockpiles fell by 1.5 million barrels last week, and we'll see what impact that can have on the oil price, which has been rising for the last few weeks on the back of tighter supply and on the back of Saudi Arabia continuing its 1 million barrels a day output cut until the end of August, and also Russia announcing a few days ago that it was going to cut its output by 500,000 barrels a day also until the end of August. So let's have a look by, let's start off with currencies actually today, and let's have a look at euro dollar. And we can see here on the daily financial bet of euro dollar that the euro has risen against the greenback for 4 consecutive days and has now overcome its June high at 110.12 and seems to be heading towards this key resistance area made up of the mid to late April highs between 110.75 and 110.95. So this is really important resistance, and we'll have to see whether we can break through it now or whether it will cap once again as it has done so for the whole of this year so far. If we were to manage to break above 110.95, if I zoom out here onto a weekly chart, we can see that would then be heading back up again towards levels last traded in March of 2022 at 111.85. So that would be our next upside target, together with the January of 2022 low at 111.22. So 111.22, 111.85 would be the next upside targets in case of a rise above 110.95. That is to say, the April high being seen over the coming days. So it'll be interesting to see what will happen today with regards to the US dollar on the back of that inflation reading, which we expect 1:30 p.m. out of the US, the CPI data, and whether we can continue this advance we've seen over the last few days in the euro against the US dollar on the back of that weaker US dollar. And the story is quite similar with regards to cable, the British pound against the US dollar. As you can see here, we are now trading at levels last seen back in April of 2022, and we are heading towards the psychological 130 mark, as we've now risen above the June high at 128.48, which is technically very positive. So it is looking likely for cable to continue to advance and to head to above the psychological 130 mark. It may short-term struggle there simply because it's a round number. Quite often financial markets tend to pause at least around these psychological resistance areas. But if it were to be taken out, we would have to go again onto a weekly chart here. And we can see that the next upside target for us would then be this December 2021 low at 131.62. So that would be the next upside target in case of a rise above the 130 level being seen. But as we've just alluded to, the Bank of Canada is likely to hike its interest rates later today. And if it does so, we may see a move here in dollar Canada to the downside. As you can see, we're already slipping from last week's high, the current July high at 133.87, and heading down on this anticipated second consecutive 25 basis point rate hike by the Bank of Canada, which would take its interest rates to 5%. So here the next downside target, which is basically being tested at the moment, is the 4th of July low at 132.04, and that is short-term support on this chart, and a fall through there would probably take us down to the June low at 131.17. So that would be the next downside target with regards to dollar Canada from a technical perspective as well. And this is valid provided we stay below this 133.87 high made back at the end of last week. US equity markets are likely to be quite volatile today, and if we look at the NASDAQ, this is just one of the markets which are very interesting. On this CPI reading, and what we can see here on the NASDAQ 100 is that we would need to take out the highs seen back in June and also early July between 15,281 and 83 for us to head up towards the 15,500 area. So these are the key levels to watch out for from a technical perspective. And if we go into a weekly chart, we can see here that we have been flirting with the March 2022 high for quite a while now, and we could be heading up again towards the December 2021 low, which comes in at 15,501 as our next potential upside target in case of this key resistance area between 15,281 and 83 being broken through. And on the downside, the level to watch is basically the low from Monday earlier this week at 14,920, because a fall through here would probably mean that we are heading back down again towards the bottom range of the sideways trading range we've been in since June, and that would be the late June low at 14,688. So watch these levels with regards to a future breakout point, because it will probably give us a good indication of where the next short-term trend is going to go to. Moving on to the UK market, we can see here that the FTSE 100 is finally regaining some lost ground, being the biggest laggard in European markets, and I believe also the only major equity index globally which is greatly underperforming all the others, and which just this week was down nearly 4% year to date. Now we're heading back up again ahead of this US CPI reading later today at 1:30 p.m. and we are heading towards this key resistance area between 7,401 and 7,433. That is to say the May lows and the June lows, which are likely to act as a really good resistance. And from a technical perspective, provided we stay below the last reaction high, that is to say the early July high here at 7,562 on this daily financial bet, as long as we don't take that out, and the red line here, the 200-day simple moving average, and also the downtrend line going back to April of this year around similar levels, around 7,577 to 80, as long as these don't get breached, we remain in a downtrend. Because if you look at this chart and the daily financial bet, you can see that since April we've had a series of lower highs and lower lows, which is the definition of a downtrend. So despite the current bounce here that we're seeing, the trend seems to be still pointing down. And if we were to fall through last week's low at 7,228 on this daily financial bet, then we would retest the March low at 7,204, which we made back then when we had the banking crisis in the US, the regional banking crisis, leading to also a European banking crisis with the second largest bank in Switzerland, Credit Suisse, having to be bought out by UBS, its largest investment bank. So here we can see short-term risk-on sentiment. We'll see what it looks like later on after the CPI data release in the US at 1:30 p.m. But moving on to Germany, the picture is quite similar in that we did actually fall through some key support going back to April of this year here, as you can see, between 15,710 and 15,625 last week, and close below there, which led me to say that we probably, from a technical perspective, have now formed a top here at 16,428 on this daily financial bet in June, and that further downside is in store. But over the last 4 days at least, or at least today also, but over the last 3 consecutive days, we've been rising with regards to the DAX 40, and we seem to be on track to rise even further today. It'll probably depend on what the US CPI reading will say, whether we can maintain this upward momentum. If so, we've got the 55-day simple moving average here in orange, which comes in at 15,968, excuse me, and that together with the psychological 16,000 mark may act as pretty good resistance short term. Again, here from a technical perspective, for this to be just an ABC zigzag correction in Elliott wave terms, in a longer term uptrend, what we would need to see is a rise and daily chart close above the 16,211 high seen at the beginning of this month. If so, we would probably be also heading above the June high towards the 17,000 area or so. But provided we stay below that downtrend line and below that high here at 16,211, it could still be the case that we will falter here and then head back down again towards the low seen last week. Failure there would put us on track for the red line here, the 200-day simple moving average at 14,998. So interesting to see what's going to happen there over the next few days, especially with this inflation reading out of the US today at 1:30 p.m. And then later on this week with the US earnings season kicking off in earnest, basically. When looking at commodity markets, commodities have benefited from the weaker US dollar over the course of this week, and the dollar weakened, if you remember, last Friday when the unemployment data came in much weaker than expected at, I believe, 209,000 non-farm payrolls. And basically that has led to the US dollar falling, and you can see the inverse of this happening here on the daily financial bet of euro dollar. And euro dollar, as you can see here, has risen and is now trading above its June high and is heading towards the April highs between 110.75 and 110.95, and that is critical technical resistance for euro dollar, because basically I've already covered that earlier on. As I said, sorry, what I was meant to do was actually to go on to crude oil. And if we look at the crude oil chart here, we can see that we have broken above the May high at $74.70. And this is the first time we've done so since the beginning of May, which is actually technically quite bullish and would mean that we are now having this red line here, the 200-day simple moving average at $77.13 as our next upside target for WTI. And provided we stay basically above this 1 month uptrend line and also the orange line here, the 55-day simple moving average at $71.46, further upside looks to be in store with regards to the price of crude oil. Moving on to the price of gold, and as you can see here, the gold chart basically has been looking quite bearish of late, and over the last couple of weeks or so has managed to recover somewhat and break through its May to July downtrend line, but we haven't really gained much traction to the upside. I mean, we've risen so far to about $1,941 per troy ounce on this chart, and We'll have to see whether we can maintain this gradual advance today with regards to the CPI data out at 1:30 p.m. in the US later on today. If so, perhaps we may gradually rise towards the orange line, the 55-day simply moving average, and also the mid-April low between $1,962 and $1,970, which would probably act as a resistance area. And short-term, basically, the trend seems to be slightly up, but it is more a sort of sideways trading range with an upward bias than a proper uptrend at the moment. For this to change and to an uptrend to be seen, we would have to take out the last reaction high, which is the mid-June high at $1,968, which is basically where this resistance area I just told you about also comes in. So basically only a rise above $1,970 would mean that we are forming a significant bottom here. And unless that happens, it's more likely that we will soon fizzle out again and head back down with regards to the price of gold, and we could then therefore retest the psychological 1,000 mark. And a failure there, and also failure at the June low at $1,893, would then put the 200-day simply moving average here in red at $1,870 back on the plate. And last but not least, let's have a quick look at natural gas prices. And natural gas prices had risen quite sharply because of output cuts in Norway over the last few weeks, which are getting remedied. And this is the case because basically Norway is now providing about 25% of Europe's needs with regards to natural gas. And you can see here now that the situation is normalizing, the price of natural gas has come off its June high at $2.93 and has slid to the $2.53 low seen just last week on Friday. Since then, we've risen a little bit on the back of all this risk-on sentiment that we're seeing in general in the financial markets. But as long as we don't take out the 5th of July high at $2.79, this one here, we remain in a short-term downtrend phase, and it would mean that if we were to fall through this $253 mark, we would then head towards the orange line, the 55-day simply moving average at $2.48, and perhaps could that also come all the way back down again towards the support line here, going back to April of this year, so back towards the $2.20, $2.06 mark. So we'll have to see whether that's the case or not. But if we were to see, however, further advances in the price of natural gas take us above this $2.79 high seen on the 5th of July, then basically we would once again have the June highs and also the psychological $3 mark in our sights. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is AxelR_IG.